Nancy, we are still confident. We still see long-term China is the right place to be. We see good growth prospects. We see good liquidity. We see good income in the form of dividend yields. And we see better management, better corporate governance. The reform process that's been going on for the last couple of years is starting to break through. And despite all of the headwinds with trade wars and politics and so forth, we do think long-term that the growth profile in China is very good, and the valuations are even better. So we're still very favorable on China.
Even with that trade threat that you point out, now we're talking about the $200 billion of additional goods that may be subject to tariffs here. That doesn't make you nervous? Because listening to the likes of Tony Fernandez, he answered Oriel's question about impact from tariffs. He said, not yet. And sure, he has a different outlook than certain companies would, especially in mainland China. But still, we hear that a lot from executives. They're saying not yet, but they're nervous for what could come. Does that make you nervous?
It makes me nervous. It makes us nervous. I think it's hard not to be nervous, but I think what you have to do is take a step back. And I think the base case scenario is that the trade war talks will blow over and that there will be a negotiated outcome. That seems to be the consensus belief, that's the view at Eastspring, that this is a lot of noise in the short term. And so we're trying to focus on the long term. I mean, we've seen with the U.S. and Mexico, and now with Canada potentially, that deals are being achieved. And we hope that China will go down a similar path. So we're trying to look beyond this with our outlook on China.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.